Do you have a professional corporation, or maybe you're thinking about owning a professional corporation and you want to know, are there ways for me to cut taxes? How do I build wealth? How do I protect my legacy? Or maybe just, just want to get clarity on how this thing works. Stick around for 8 to 10 minutes. We'll see where this lands. And I will go over, the general rules of this thing. Now, before I get started, one thing you have to know is that this framework, it varies based on the province you're in. It also based on the regulatory body that governs your profession. So I'm speaking in general terms here. My recommendation to you, and I invite you to do this, is to work with the professionals that you have. Reach out to them, ask questions to figure out how this works for you and your situation. Because again, I'm going to speak in broad terms. So let's start off with, what's a professional corporation? A professional corporation, as the name suggests, is a corporation. And under the eyes of the law, it's a separate legal person from you, the regulated person, right? Now, this separation gives you quite a bit of flexibility and opportunities in different areas. For one, this professional corporation can earn income separate from you, right? Because while you could be hired by the corporation, you receive a salary, the money that stays in corporation is considered retained income, and those retained earnings will be taxed in many instances at a lower rate than you, the salaried employee that's pulling salary. The opportunity for professional corporations is also to own assets. You can hold property, investments, equipment, etc. No, word of caution, depending on who you are and what regulatory body you're governed by, they may limit the type of assets you own. All right, so again, this is where you speak to your professionals, but no, generally they can own assets. And of course, there's limited liability, which is why many people start corporations in the first place. But again, depending on your regulatory body, it depends on the thing you do, you may be shielded from some liabilities, but not all. Now, how does this thing start? Some of the foundational documents and things that you want to look at is, for example, the incorporations, articles of incorporation. And really, this is a foundation document that captures the basic things such as the corporation name, the types of shares that you have, which we'll talk about briefly in a short time, the number of directors, the business restriction, things like that will be listed in the articles of incorporation. What else? You may have bylaws, and those operating bylaws essentially are rules that govern how this corporation will be run. How many meetings you run, officer director appointments, dividend structure, signing on authority, things like that. The other thing that you will have is a minute book, which contains permanent corporate records such as the articles, the bylaws, the shareholder resolution, director appointments, and really the share ownership history. Another document that you want to have is a tax file, right? Which stores the share structure details, crucial for future tax planning and compliance. And quite frankly, you want to have your tax documents along. That being pretty close. Now, as stated before, you could own different roles, and one of that role is director. And you may think, okay, corporation is a separate legal entity, and of course I'm protected from all personal liability. Well, not necessarily so. You can be personally liable as a director in a corporation for payroll payments, GST and HST obligations, withholding obligations, things of that nature. You may have a bit of a defense if you have done your due diligence, which means you've taken reasonable steps to make sure that the corporation has met its obligations. And it really only applies when you can show and demonstrate that you've acted responsibly and took all the appropriate measures to ensure compliance, right? So this is why it's important to find out what these responsibilities are. And then after finding out what these responsibilities are, to make sure you're taking the steps to follow through and do those things. Now, we talked about shares, and we talked about different types of shares. So you may say, okay, what does that even mean? Well, the provincial rules, again, based on regulatory body, based on your province, will require that the professional generally own the voting shares of the professional corporation. And you could understand why that's the case, because this ensures that you, the professional, maintain control and meet the regulatory standards, because you are the one who have been sworn in by the regulatory body and you have committed to upholding all the rules of the regulatory body. So your next question is, can my family be a part of this corporation? Well, many provinces allow certain family members to own non-voting shares in the corporation, such as your spouse or your adult children. And of course, the opportunity here in those instances is for you to potentially transfer wealth to your family members, right? Now, what are the multiple share classes? What does that look like? Well, professional corporations often authorize several types of shares, which provide flexibility and future planning. I'll kind of talk about three. First one is voting common shares, which is the one I just mentioned that you, the professional, have. It gives you control of the professional corporation, as the name suggests. Voting shares, you have control. And in many instances, it's going to be required by the regulatory body that you are governed by. Then we have these non-voting participating shares. That can be issued to your spouse or adult children. And many instances, this is why people have this, is to allow your spouse or your adult child or children to participate in the dividends and the growth of the corporation. And the benefit there is obviously wealth planning. And in many instances, you're saving tons of taxes. The other one you may hear is non-voting, non-participating shares, and that's usually used later in life when you're, grown your corporation, or maybe you're there now, grown your corporation to a place where it has significant wealth, and essentially what you're doing is you're restructuring and you're freezing your assets. This probably has a value at that point, and you're freezing it, and so you know exactly what the taxes are, and you allow growth to go separate and apart from those non-voting, non-participating shares. It's more estate planning structure, which warrants its own video, but just know these are the three you typically hear. But when you're starting, really, it's really just voting shares, voting common shares, and non-voting participating shares. So you may also hear about holding companies. What are holding companies and why are they used? Well, a holding company is, as the name suggests, holds stuff. But what exactly does it hold? And many times it's holding assets versus the professional corporation you started, which is more of an operating company. And the holding company is a separate corporation that works alongside your professional corporation. Let's call it OpCo for now, that maximizes wealth accumulation and protection. Now, this separation, the holdco, the holding company versus the operating company, which is usually the one that everyone knows and is the one that's customer facing, client facing. This ensures that your retained earnings are better protected. And also, what you want to do is use it as a vehicle to grow your wealth. So the structure typically is this, that the holdco owns the shares of the professional corporation. And what it does is accepts tax-free dividends from the professional corporation, and then we could build wealth separately. So we have wealth accumulation taking place here. And that holding company builds assets separate and safely away from your operating practice that is customer facing, which of course is more likely to be sued or any other business risk that comes about with that. So what you're able to do is move the surplus cash flow from the operating company over to this holding company to ensure security and long-time growth. So huge benefit. Again, there's a lot more that could be said about that, but it's really just a broad strokes type of a video. So why does all of this matter? Holding company, professional corporation, what's the benefit? One, of course, having a corporation just generally is great for tax deferral, right? It keeps your money separate and apart from you, from the salary that you earn, which in many instances will be at a higher tax bracket than the corporation, which is often have a smaller tax rate than the salary that you're earning, especially if you're in six figures and above. Opportunity here for wealth accumulation. We talked about that with a holding company. Great opportunity there. Income flexibility. Having a corporation allows you to, choose between salary and dividends or a combination of both based on your situation to create tax efficiency and just to be strategic, right? Corporation generally, and also professional corporations offer creditor protection. So separate your personal assets from your business risk and protect your accumulated wealth. This is what we do in terms of the holdco. And this financial separation allows for personal, financial, and legal strategies that, quite frankly, you want to think about as you grow and build wealth. And lastly, in the long run, you have some opportunity for estate planning. So you could structure your wealth transfer efficiently to minimize taxes and to maximize wealth that's transferred to family and the people you love, right? Now, I've kind of thrown quite a few things here. And this is what I want you to take away from this, that it's an important structure and you need to take time to make sure that you're really informed about what's taking place with your professionals, lawyer, accountants, financial planner, to make sure that it's structured to have the right control. We talked about voting shares and how important that is. Participation, how your family can participate and be a part of that wealth accumulation that's taking place. We also talked about the certain protections that you can put in place with a holding company. Of course, an operating company has its protections, but you could protect your wealth, as you build even further with holding companies. And all of this has to happen within the confines of the law, of course. So you want to make sure that you're maintaining and being compliant to the provincial rules, to your regulatory body, to your tax rules, which is why it's important to understand your structure, ensure you're using all the benefits available, and maintaining compliance, because if not, you may have some problems either at a regulatory level or at a tax level or a legal level, right? But generally speaking, your professional corporation is a quite a powerful tool, and what you want to do is make sure that you're speaking to the right professionals to use it as that. Better now than later on you get in trouble or find out that you could have been saving taxes and not done so. And so again, I invite you to speak to your lawyers, lawyers, your business lawyer, your tax lawyer, your accountant, your financial planner. Have it all work together and be strategic in building this thing. As always, I hope this was helpful, and every week I will, bring about things that I've discussed with other professionals or coaching clients or clients that I have, empowering Canadian business owners to be the best they could be in what I see and deem to be a very competitive world. Take care.